Hey guys, Max here, and this is your daily market update for yesterday, the 26th of December. Of course, it was Sunday. Markets will be opening soon, and we are about to be seeing the end of the Christmas break, but a few things did still pop up. So we're just going to cover them quickly, not going to be a super long one today. Now, regarding the markets, European stocks are just now holding steady with slight improvements in healthcare stocks. Investors are still trying to interpret all this Omicron data, especially in Europe where cases are rising very quickly. The consensus at the moment seems to be that hospitalizations and especially deaths are remaining quite low, and so the need for restrictions isn't actually there, so there is some cautious optimism around about in Europe. The problem is that the real issue isn't the effect on the economy that the virus will have, it's the impact that the government's restrictions will have. And that's obviously a lot harder to predict because governments often do awful things. Now, most mainstream media outlets are focusing almost exclusively on the high case numbers while conveniently ignoring the low mortality rate, and they're really pushing for the idea that we need another lockdown. Unfortunately, these outlets do still have huge sway over the politics in our countries, and their non-stop calling for restrictions in the past has been successful in the past. So if you look at the difference in public perception in countries where the media hasn't been pushing for this kind of stuff compared to where it has, it seems bright as day that the media are using their positions of authority to push for policy that favors themselves. Obviously, this is something I'm pretty unhappy with, but what else can I do except start my own media company and try and put out news that I think is unbiased and does a better job at informing the populace? So here we are. Anyway, moving back to Asia, and again, the markets are a little bit cautious. China's economy has obviously been getting smashed. It's not been doing well at all over the last year, but the Chinese state has been promising more and more support for the economy over recent days, and this is causing some increased optimism amongst investors. Of course, the Chinese economy is also very influential in neighboring countries, so a lot of Southeast Asian markets are seeing a similar cautious rise. It is definitely interesting to see how China and the US are going in almost opposite directions at the moment in terms of monetary policy. The Fed is, of course, preparing to raise interest rates next year, and they've accelerated their planned taper, so they'll be reducing their asset purchases as well. But all this talk from China is saying that they're going to go for a looser monetary policy to try and aid their economy. This could be a sign for what is to come for the US in a year or so, if the American economy starts to fall as well. Well, right now, there's a lot of speculation surrounding what the Fed would do if that happens, if a recession hits, if they would maintain their slightly hawkish stance to try and fight inflation, or if they would go back to quantitative easing and 0% interest rates in order to try and save the economy. China seems to be going in that direction, and I personally wouldn't be surprised at all if we saw the US go in that same direction as well. Now, we've been hearing from Democrats in the US, and it seems like Build Back Better is still on the table, just maybe a few months behind. Now, Kamala Harris has come out and said that they are seeking a path forward. Basically, it's going to get watered down a bit more, after which they'll try to get it passed again. To be honest though, this isn't great news. For this bill to actually work as intended and for it to not cause ridiculous amounts of inflation, it needed to be passed really quickly, be really tight and focused, and just concentrate on the things that really need extra funding. But the longer it waits, the more it just becomes fuel on the fire of inflation, as the economy has already mostly recovered from the pandemic. Now, whether or not the bill will ever actually get passed is yet unknown. Maybe Manchin will have another nervy, maybe he'll see it reduced to a size that he can support. But if there's one thing we do know, it's that the US loves a great big deficit, and it wouldn't be a change of heart to see that deficit increasing size. We've got some more troubles in Turkey as well, as inflation still soars out of control, and the administration has now officially abandoned interest rate hikes as a tool to control price pressures. This is obviously a bit weird, as they've been doing the opposite of this in the past, so I don't know why they're abandoning this strategy now. They've been making interest rates lower in some weird roundabout way to reduce inflation, which obviously hasn't been working. Turkey is really struggling right now, the lira has been getting hammered, and the people on the ground are suffering as a result. There is, however, a lot of nuance at play here, and there's far more history and far more information to cover than I can squeeze into this video, so I'm writing a longer video about this right now that will explain everything going on in detail, and that should be coming out in a few days. Now, what else have we got for the week? Well, markets are opening again. Lots of them are going to be closed Monday for the Christmas break. And on Thursday, we'll get more data from the US on initial jobless claims, which will be interesting to see. But other than that, it's going to mostly be just business as usual and maybe a quite slow week. We are seeing a couple other interesting things take place though. The race to go public for growth, disruptive or technology stocks, whatever you want to call them, seems to be getting stronger than ever. Companies are trying to ensure that they can release some equity and raise some capital at a time when evaluations are at all-time highs. And that's led to a record number of IPOs, SPACs deals, and just capital raised in general over the last year. Now, over in the UK where I live, some fintech startups are moving in that direction as well, with Starling Bank in particular looking to go public sometime in 2022. It's not going to be hugely impactful, but it is actually one of the only industries outside of the US where there seems to be any real innovation taking place, the kind that you see in Silicon Valley and not much anywhere else. Now, also in the UK, the Chancellor is expected to cut a few thousand civil service jobs as more of the government's day-to-day running is moved out of London. This is mostly interesting because it represents quite a large shift in the politics of the UK, where for decades all of the focus was on London because of how wealthy the city was, but Brexit, along with the abject failure of the Labour Party, has shifted allegiances, and there is now more political potential in helping to move wealth to other parts of the country and change the voting dynamics of the country for good. For Americans watching, or people who just don't keep up to date on internal British politics because frankly it's not very interesting, well, this would be like if regions which had voted for the Democrats consistently every single time for 80 years in a row, and where Republicans were hated and the word Republican basically became a slur, all of a sudden and over the course of just 2 or 3 years switched sides and started voting for the other team. In a world where politics is getting more aggressive than ever, this sort of change of dynamics could happen all over, and I wouldn't be terribly surprised if we saw something similar happen in the US, something equally as disruptive. Now, in other bits of odd news, Germany and their economy seems to be performing well, but the retail sector is notably struggling under fresh restrictions. Manufacturing in particular seems to be quite happy, with most firms saying business is going well. This is something that we should expect to continue, especially as we see a shift of trade from China to other manufacturing countries in wake of the awful foreign relations China has these days. A Thai tech company announced that it was going to start Bitcoin mining, and the stock has now increased 7,000% on that news, beating pretty much everything in the market. It's a little bit strange of a reaction, to be honest. They aren't really doing anything of substance yet. They only have 300 machines and they've only mined 8 Bitcoin so far, which is around $400,000 in revenue, and yet the company is valued at almost $3 billion. I don't really know how anyone can justify that valuation. It's a bubble. It's as simple as that. There is no justification for this behavior in the market except for just pure unbridled speculation, investors with too much cash, and the hype train driving forward while the fear of missing out picks up the rear. Now that is it for the day. Not a huge amount going on right now, and the next week might be a little bit light on the news as well, as we are heading into the new year. But I'll be putting out a few longer scripted videos as well, so that should hopefully help keep the space interesting. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for my own personal investments. And if you join before December ends, then the next month will be entirely free. But this offer only stands for a few more days. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.